As the inflation crisis gets worse, it becomes more and more apparent that there is only one option left for the political elites, and that is to print more money. In fact, the bailouts are already starting, and they will likely be much bigger than many people anticipate, especially with the scale of the problem and a new 1.5 trillion euro bet that just went catastrophically wrong. My name's Lark. I make videos on investing. If you do like that topic, then please do subscribe to the channel. Leave a thumbs up on this video as well. Let me know you do appreciate this kind of content. By the way, my team and I make the Wealth Mastery newsletter every single week. We share the information that you need to find an edge in the market and to make money in crypto. Our members love it. I'm sure you will too. And the best part, it's free to get started. So sign up using the link down below. Okay, so the European energy crisis just keeps moving from bad to worse. And let's start off with this story about the $1.5 trillion margin call that just happened that could crush Europe's energy sector. In a near unbelievable turn of events, European energy utilities went balls deep into shorting European gas futures to try and hedge their bets on the market. This happened after the price of European gas futures dropped precipitously from 340 euros all the way down to 220 euros, as you can see on this chart here. And then Russia came along, doop, and pulled their trump card and closed the Nord Stream 1 pipeline indefinitely, sending European energy markets into a further panic and sending prices spiking back up, leaving a 1.5 trillion euro margin call in play that threatens to ruin European energy providers. This is being called Europe's Lehman Brothers moment. You know, Lehman Brothers, the fourth largest investment bank in the United States back in 2008, before it went on to file for bankruptcy due to $600 billion of subprime mortgage-backed securities debt that they ended up defaulting on. And here we have European energy providers all about to, well, bankrupt themselves from gambling in the futures markets to the tune of 1.5 trillion euros, which is almost 3 times as much as big as the Lehman Brothers crisis. The only question for the European Central Bank now, I think, will be, are they going to intervene to bail out the energy sector and to fill this gaping wound with some freshly printed euros? We shall see. But I'm not sure they're really going to have much of a choice in the matter. They're going to have to intervene. Meanwhile, it's estimated that European energy costs will soar by at least 2 trillion euros this winter, which will eat up 20% of the average person's income, meaning that regular people will be stretched very thin, and that this is, of course, before they lose their jobs, as an increasing number of businesses are saying that they will be forced to close if the energy crisis continues. Civil unrest is already starting in Europe as well over the cost of living crisis. For example, people are protesting across Italian cities, going out in the streets and burning their energy bills, saying, I will not pay this, this is ridiculous. 70,000 Czechs took to the streets in anger at rising bills just the other day. People in Scotland also planning to join in the protest and get out there and burn their energy bills. And that is just a small sample of the stories from across the continent. There are many more like this. And the worse it gets, the more apparent it becomes that printing money might be the only way out of this mess. Germany already announced a 65 billion euro bailout package. The UK is debating a 150 billion pound bailout package equivalent to 5% of their GDP. The EU announced 2 weeks ago a 280 billion euro plan to try and cushion the blow from the energy price shocks with a 1.5 trillion euro margin call and 2 trillion in increased fees. All of the proposed bailout money so far only addresses about 10% of the size of the problem, leaving a 3 trillion euro disaster essentially unpaid for. The choice will be for Europeans, political class, to let Europe descend into total chaos with huge civil unrest already happening, big spike in crime. Law enforcement is already warning about that. People, literally freezing to death in their homes, maybe extreme, but could happen. And of course, a collapse of European industry. Or just print money. Lots and lots and lots and lots of money. This is what I suspect is going to happen. Huge bailouts of the energy industry are going to come. Huge sums of money will be given to regular people so that they can pay their energy bills. And of course, Primarily, huge sums of money will go to industry so that they keep the lights on and stay in business and keep people employed to avoid an unemployment crisis, which will just make everything so much worse. And here's the thing, if they're forced to print enough money, then markets could actually switch bullish again, at least in the short term. Because remember, unprecedented money printing is exactly why we are in the current mess right now with inflation and crushing rate hikes and all the market turmoil that's happening globally. So long term, more money printing would just distort markets even more than it already is and make the inevitable crash even worse. It's just kicking the can down the road. Plus, outside of the potential for the European Central Bank to, just print up a few trillion euros, we do have other events too, like the US midterms which are coming up, and that could cause a little market pump, calm everyone down, get the markets looking in better shape, so everyone goes and, votes for the ruling party. Of course, we also have the fact that Octobers are often bullish, at least as often as September's can be bearish. And that, to be clear, if this did all play out, that would be just a bear market rally. It would not be a new bull run. But, I think you just have to focus on the fact that nothing really matters outside of the macro right now. All your tech stocks, all your crypto, none of that's gonna do jack shit until the macro conditions changes. Why we keep talking about it so much. It's so critical that you understand what is happening, the big moves happening in the global economies, so that you can make the right decisions for your portfolio. Anyway, do let me know what you think about all of this stuff down below in the comment section. As always, keen to hear your opinions on all of this craziness. Thanks so much for watching today's video, and peace out till next time.